What we're seeing right now in the gold market is nothing short of historic. Let's go post by post and break down what's happening. Post by @XAUUSD. New records continue to be set. Unilateral rise, in line with expectations. Today's first target is around 40.90. Gold is now on a record-breaking streak, climbing in one clear direction, up. A unilateral rise means the market isn't hesitating. Buyers are in full control. The 40.90 level mentioned here isn't just a random target. It represents the next technical resistance zone, a level where traders expect temporary pauses before the next leg up. Post by @Shirley. Gold has hit a new all-time high and is expected to test the 40.90 to 4100 range. If gold continues to hold the key support level of 40.30 today and stabilizes above 40.60, it is expected to test 40.80, 40.90, 4100. This is a classic technical setup explanation. Shirley points out the support at 40.30. That's where buyers previously stepped in. If the price holds that line and trades above 40.60, it opens the door to those upper targets around 4100. It's basically a roadmap showing how professional traders read momentum, holding support, building strength, testing higher levels. Post by Garrett Goggin. Gold, LOL. There's no such thing as a triple top. This one's interesting and a bit sarcastic. A triple top usually signals that a market has peaked after testing the same level 3 times. But Garrett is saying gold is defying that pattern. Every time it hits a supposed top, it breaks through. That's a sign of strong underlying demand and disbelief among traditional chart watchers. Post by Don Durrett. Big open for gold and silver in Asia tonight. This short post carries weight. Asia is one of the biggest centers for physical gold demand, especially in countries like China and India. A big open in that market often sets the tone for the rest of the global trading day. When you see strong buying early in the Asian session, it means sentiment across the world's largest gold markets is turning even more bullish. Post by Rashad Hajiev. Gold to silver ratio reached my first target around 79. Silver is trading at $51 plus. Next support for GTS is 72. Even at present gold price, that means $56 silver price. But I am sure gold price will be higher, hence silver likely to trade $57 plus. This is a key intermarket indicator. The gold to silver ratio measures how many ounces of silver it takes to equal 1 ounce of gold. When the ratio falls, like it's doing now, it usually means silver is outperforming gold, a sign of strong industrial and speculative demand. If it drops towards 72 and gold stays above $4,000, that could indeed imply a silver price above $56 to $57, as Rashad notes. Again, this is analysis, not advice, but it shows how interconnected both metals are right now. Post by Dabra Robinson. Gold, the measured move out of that triangle, is worth over $100 of upside. Here, Dabra is referring to a chart pattern breakout. When gold broke out of a consolidation triangle, the projected move, or measured move, points to another $100 of potential upside. These patterns are common in technical analysis, and so far, gold seems to be following through exactly as the charts predicted. Another post by Rashad Hajiev. Gold is about to make new all-time high. And that's exactly what happened. Gold pushed beyond its old records and kept running, confirming what many analysts had been waiting for. Post by @ZeroHedge. Spot gold rises to record above $4,060 per ounce. This confirms it. We've officially entered uncharted territory. Gold above 40.60 is not just a number. It's a signal of what investors worldwide are feeling. Inflation fears, geopolitical uncertainty, and a rush into tangible assets. Post by the Great Martis. Gold and silver look set to break out to new highs as tariff uncertainty intensifies. That's the macro backdrop driving this move. When trade tensions rise or tariffs hit global markets, investors often flee to safe havens like gold and silver. These metals act as insurance against instability, and the market is clearly pricing in that fear right now. So putting it all together, gold is holding above 40.30, testing new highs around 40.90 to 4100. Silver, meanwhile, is surging above $51, with analysts eyeing the $56 to $57 range if momentum continues. Every post reflects the same theme: a synchronized breakout in both precious metals, driven by tightening supplies, technical strength, and global uncertainty. No one can predict exactly where it tops, but this rally is being watched closely by every major investor, from Wall Street to Shanghai. Gold has broken barriers before, but this time the data, the charts, and the sentiment all point to one thing: the world is waking up to real value again.
Now let's dive into the first article is from FX Street titled Gold Price Forecast, XAU-USD Rises to Near $4,050 as Trump's 100% tariffs ignite safe haven demand. And the second one is from FX Empire titled Gold XAU-USD Price Forecast, Bulls Watching Powell and Xi as Trade War Fears Grow. Let's break down what both are saying and why this moment in the gold market really matters. Over the past few days, gold has been moving sharply higher, reaching close to the $4,050 per ounce mark. According to FX Street, this sudden surge is being driven by renewed safe haven demand. And the key trigger was U.S. President Trump's announcement of 100% tariffs on Chinese imports starting in November. Whenever major trade tensions flare up, global investors start seeking safety. Gold has always been the top choice for that. It's the asset people turn to when currencies, stocks, or trade policies feel unstable. So naturally, the tariff threat pushed traders out of riskier assets and into gold. FX Street also adds that the market is now expecting 2 Federal Reserve rate cuts, one possibly in October and another in December. Lower interest rates reduce the cost of holding non-yielding assets like gold, so this expectation gives gold another strong boost. But the article also warns, if upcoming U.S. inflation or retail data come in too strong, the dollar might rise, which could cause gold to pause or pull back temporarily. That means even though gold's momentum is powerful, it's still highly sensitive to economic data. Now, moving to the second article from FX Empire titled Bulls Watching Powell and Xi as Trade War Fears Grow. This one zooms out and looks at the bigger picture. FX Empire points out that gold has now seen 8 consecutive weeks of gains, showing that the bullish momentum isn't just a reaction to one headline, it's part of a broader global shift. They mention that investors are watching Federal Reserve Chair Jerome Powell very closely. If Powell sounds dovish, meaning open to more rate cuts, that would likely send gold even higher. But if his tone becomes more cautious or hawkish, the metal could see some short-term pressure. The article also highlights the role of Chinese President Xi Jinping, since how China responds to the tariff threats will determine how deep this trade tension goes, so both political and monetary sides are shaping the next move in gold. FX Empire also shares an important technical view. If gold drops below around $3,884, it could signal a short-term correction. But if it breaks above $4,059, it may confirm another strong leg upward, possibly setting the stage for new record highs. On top of that, they mention strong central bank buying and continued ETF inflows, which add long-term stability to the gold market. So, putting both reports together, here's what's really going on. Gold's rise isn't just about one event. It's a combination of global uncertainty, trade policy fears, and expectations of easier monetary policy. In other words, investors are preparing for volatility, and gold is the hedge they're choosing. But there are 2 sides to this story. If inflation data keeps rising, or if the Federal Reserve slows down its rate cut path, the current bullish wave could cool off. On the other hand, if tensions between the U.S. and China escalate further and Powell confirms a dovish stance, gold could continue climbing well above $4,100 in the near term. To wrap it up, both FX Street and FX Empire agree that gold's rally is being powered by fear and fundamentals working together. Trade tensions are creating short-term buying panic, while expectations of lower interest rates are giving the move long-term support. But, as always, this isn't investment advice, it's market analysis based on publicly available reports. What's clear is that we're entering a new phase in the gold market, one where politics, policy, and global trust are all colliding. Whether gold holds above $4,000 or pushes even higher will now depend on how the next few weeks play out with Trump, Powell, and Xi, the 3 biggest influences in this story.